We saw good news in terms of Aussie data as Australian retail sales rose for the 10th consecutive month in February. The trade surplus also beat forecasts of 1.2 billion, with strong exports to China. I'm joined by Rabinov, an economist at ANZ in London. Now Amber, was there any market reaction as a result of this positive news?
Well, it was quite interesting overnight. We actually saw very little reaction to the data, and if anything, the Aussie dollar traded a little bit weaker as the market had been expecting a slightly stronger retail sales print. But as you mentioned, taking a step back from those volatile monthly figures, the data were actually quite positive. So if we look at the retail figure first, in trend terms, growth has been running at about 0.7% in terms of a monthly pace. And on the trade numbers, that $1.2 billion surplus was actually above the market expectation of a smaller $800 million result, although the surpluses over the prior 4 months were actually revised down by a cumulative $670 million. So perhaps that was another weight on the currency and why we didn't see a positive reaction to these numbers.
Glenn Stevens said it's too early to be sure a handover from mining investment to domestic-led growth will actually occur smoothly. Now, would you agree with him, Amber?
I think that's a pretty fair assessment, and although we're seeing some signs of this transition taking place, the smoothness of this transition is not guaranteed. So while we're seeing the interest rate sensitive sectors of the economy recovering, such as in retail sales, we're not seeing a handover, for instance, from mining-led investment growth to a pickup in the non-mining sector. And let's not forget that those mining investment projects that are winding up are rather large in scale, so that in itself can lead to more lumpy growth figures. Now, while here at ANZ we're actually expecting the export sector to be a big part of the transition of mining investment-led growth, we're not actually expecting this to really start taking hold until 2015. So overall, I do think Governor Stevens is correct to be a little bit cautious when assessing the success of the transition of the growth drivers in Australia.
The Australian dollar rose more than 3% last month, and the currency strength has hurt Australia's manufacturers. Now, would you be concerned about the strength of the Aussie dollar having a negative impact on the economy?
It's interesting to see the change in tone from the Reserve Bank of Australia. If anything, it seems a little bit more comfortable with the level of the Aussie dollar at the moment, despite its recent appreciation. And I think one factor behind that is that we're seeing a good response in those interest rate sensitive sectors of the economy to the central bank's accommodative monetary policy stance. So the decent retail sales figures, the pickup in housing market activity, these are all good news. They point to the fact that the Australian economy is probably based, and we can look forward to a pickup in growth from next year onwards. Now, the RBA is still acknowledging the fact that the Aussie dollar is above historical levels, but I don't think any action will be taken to weaken the currency. The obvious action would be a cut in interest rates, obviously, but that would not be appropriate given the activity we're seeing in other parts of the economy.
Amber, thank you very much. Well, viewers, do stay tuned as we have plenty more economic updates heading your way. Goodbye for now.